Hello and welcome to The Point. My guest today is Raamdeo Agrawal, Joint Managing Director of Motilal Oswal. We're here to talk about where the stock markets are going and also what the markets are looking for as policy prescriptions from the government ahead of the budget 2016. Raamdeo, thank you very much for speaking with us. So let's understand where we are today. The markets have lost a lot of gains that they made. Almost everything from May 2014 when this new government came in has been erased, and we've had a particularly bad year as well. Now, there are many factors that are responsible for this, but what are the singular ones in your mind?
One was the rally of around when the new government came. Just before that, the rally started 5-6 months before. So that rally has to be supported by follow up in the earnings. That never came. Now, so clearly.
So why didn't that happen?
Yeah. So that was a hope. I mean, there was a expectation from the new government that earnings would build up because stock market is only about the earnings, and earnings didn't come. So obviously, market has to correct. Now, the reason earnings didn't come, one was that unusually massive slowdown in the global economy, more particularly in last 2 years, the oil economy, which has been crushed from 110 to 30. And it is not a, I think the funny thing which I am witnessing for the first time, this is not a demand collapse kind of situation like 2008 or something like that. This is a strategic initiative by Saudi Arabia that we want to drive out high cost oil and we want to grab the market share.
More oil till everyone else
so they are pumping a whole lot of oil, almost 2 million, more than 2 million barrels a day, more than what the world needs. So it's a problem of plenty, and hence the prices crashed. Our current account deficit got corrected, our BOP got corrected. So we are in a happy situation as far as that count is concerned. But what it has done is that it has crushed the entire global trade. I mean, whether it is in, if you see our imports, we are down by 30%. Our exports are down by 25%, 27%. So it has destroyed a lot of countries' fiscal. I mean, the oil producing countries, the commodity producing country, and when the oil goes down, people don't realize, but gas also crushes because that's alternative. So that's also in pits literally. Then coal also gets slumped. So entire energy basket. So all put together, they are about $8-9 trillion kind of a global economy. I mean, gross value at that time. That has come down to more like $3-4 trillion. So this $4-5-6 trillion shock to a $75 trillion economy is almost like a 7-8% kind of a decline. But still, I get to hear that the global economy is going to grow at 3% or something, and that's why somewhere the spookiness is there. And hence.
Are you saying energy price fall and the sheer loss of value, as you said, from $8 to $3 trillion? Is that the only reason? But we've also seen a China fall in this.
Yeah, so they're all interconnected. I mean, Chinese fall and China's own slowdown or whatever development structure they're changing from investment oriented to consumer oriented and those kind of shifts. Even that itself was reducing the demand for the commodities. So the China boom, which happened in 15 years, has got crushed in steel and a lot of other things. In 15 months from say $700-800 to more like $270-280. So it's a simultaneous collapse of commodities led by China and oil led by Saudi Arabian effort. So these two unfortunately got combined.
Right. So when we talk about earnings, now earnings are really from a wide spectrum of companies. I mean, some are directly connected to energy, some partially, some are not connected at all. So why are we seeing a cumulative impact then?
Yeah. So let me just give you some numbers of what earnings mean for India. So we earn about 4 lakh crores a year. All listed companies put together, approximately ballpark
Sales.
Of about 4. No.
You're talking about profits.
Net profit.
Okay.
4 lakh crores. And the market capitalization of this 4 lakh crores is about 92 lakh crores as of yesterday. That's the game. Okay. Now, so you get about 20 times or 22, 23 times. So that's a decent valuation. So market is actually being more than fair in terms of valuation. For a 4 lakh crore profit, you're getting 92 lakh crores. You can't ask for more. Now this 4 lakh crore has to go to 5 lakh crores, 6 lakh crore like that. But what has happened is there are two sets of companies. One set of companies which is 1/3 of the market, large companies like ONGC, Coal India, Reliance and Vedanta and Tata Steel, they have lost meaningfully in their profits. Say a Tisco which was making say $1 billion profit, 4-5 thousand crores profit, that would get reduced to loss. So the delta is huge, from profit to loss. Now, but total profit is same. Corporate world total profit remains at 4 lakh crores. So what it means is that some other companies are making that much more. So the other set of the companies, they are growing, but their total profits growth and the decline in the profit of these companies, which are very large, is almost same. So overall profit remains same, and that's why the market is looking to be at the same level. But there are massive winners and the massive losers.
Okay. So, but is that, no, if I were to step back, is that good news or bad news?
There's nothing like good or bad. Okay. This is a part of the game. I mean, these things will keep happening.
No, or it could be worse, but we are protecting ourselves.
No, it's
or protecting
pretty bad.
Huh?
This is very bad. Okay. I mean, this kind of adjustment is crazy. I mean, what you built in 12 years, you crush it in 12 months. So, in fact, if the world is working smoothly, that itself is a big gift. So, clearly, this is an extraordinary adjustment. And I mean, at least my brief understanding of the market, the history, 25, 30 years, I have not seen this level of actual adjustment. Yeah, contraction.
Okay.
So, clearly, once this contraction is over, because this contraction is artificial. Why I am saying that this will be over in next 6 months, 8 months, whatever, is because it depends on whether strategic objective for which Saudi Arabia brought down the price or flooded the world with the oil, whether that objective is met or not. Once it is met, if they have driven out the high cost oil and created enough scare for the future, in that case they will say that, boss, now they don't want to kill themselves, they don't want to finish off oil industry. So obviously they will come back.
But that also seems to suggest that you're only you've sort of focused on oil as the one trigger or benchmark to watch.
Right now it's a very predominantly, I mean, of course everything is flying here and there, but oil is that's why right now the short term correlation is almost like a 90-95% with oil. Okay. Markets are moving up and down with the oil, but it is not a permanent phenomenon. It will stay till oil is that important. Okay. Because so.
Right. So let me come back to the companies. So you talked about those 5 or 6 big companies which lost value because they lost profits, and most of them are in the resources businesses. What about the ones who gained, and why did they gain?
Yeah, so say a Maruti. So they are all raw material intensive businesses. 65-70% is their raw material cost. So what do they consume? Plastics, aluminum, steel, all those components. So their prices are coming down. So they would say their margins will go up from say 10% to 15%. So all the automotive companies you see, they are in very groovy situation in terms of margin expansion. All of them, whether it's Bajaj Auto, whether it is a Hero, whether it is everybody is gaining. So the entire auto pack is growing not because their sales are growing. They are growing because their margins are expanding. You look at say Pidilite. Pidilite uses raw material which is a petroleum based, or a paint company like Asian Paints and all. Everybody's margin is expanding because they see whenever the crude prices decline, there are only 2 guys to benefit. 3 actually: government, companies, and the consumers. So consumers in India relatively small. Bulk of it has been taken by the government. Almost 60-65%. I would not know the exact number, but approximately 2/3 have been definitely taken by the government. Of the 1/3, some portion, 5-7%, which the companies which have very strong pricing power, they are held back in their raw material cost. Rest all has gone to the consumer as a whole.
Right. So what's your sense now, assuming that this is where we are, where the markets are in your sense steady, and you're saying actually that the markets are being quite kind in terms of valuation that they're giving. So what are the kind of signals that people can look forward to from here?
Yeah, so now predicting the market is mug's game. I mean, I really don't know. And shorter we are talking about short end. I mean, short end means even a year is a short end for me. Okay. So predicting these movements are crazy in the sense that shorter end you take, more irrational it is. It is a perfectly irrational market if you talk about few hours or few days. And it is a mathematics if you talk about few years, 3 to 5 years. So I operate in that 3 to 5 year zone. Okay, so for me, these are all tamasha, the short term movements and all. See, you need to be investing for 3 to 5 years. And even 3 short, but at least 3 years minimum you should be looking for. Horizon. So what happens is, I am looking for the companies which are going to make at least double the profit in next 3-4 years. And if you find those kind of companies, either your money will double, or it will go 80%, or it will go 120%. You cannot miss not making money. It is that simple.
Okay. So, which means you're saying there are aspects of India's economy which are obviously still strong, which are keeping such companies afloat and going well.
Really, say housing finance company, they are going at 20%. Industry itself is growing 20-22%. We have built up a housing finance company which is growing at some 1000%. So there is no, I mean, there are fewer spots because the general economy itself is not growing at a scorching pace. So clearly there are fewer spots where you will find growth. Okay. So you have to, as an investor, you have to find good companies with the growth potential. Right. Or the companies which don't have growth potential, they are available absurdly cheap.
So one of the things that markets always look for is the size of investment demand in a country or
Yes,
consumer demand,
yes, sure.
right? So what's your sense there? I mean, is that going to be another factor that can potentially drive things up or maybe even down if things don't look good?
Yeah, so sustained investment demand always adds up to the total demand in the economy. I mean, I'm not a macro guy, but I'm just trying to tell you what little I understand. So whenever investment, see what happens is day-to-day consumption is on, and I think Indians are blowing like big time, as if there's no tomorrow. So consumer is behaving very well, but that extra purchasing power comes into the system when you put up 10 nuclear plants, some 20-30,000 tons of thousand roads. So when the investment is there, that can be very, very bulky. You know, we create another building. So suddenly that kind of investment cycle is not there, because once the private sector came, they burned their hand. So clearly private sector is so much down and out today to invest in the infrastructure, because in India you can invest $5 trillion in infrastructure and still you are not done. The city of Mumbai can take almost $1 trillion or maybe at least $100 billion without any problem, just to repair the roads and build base. But I mean that those efforts are not there. The political will or that planning, that's not there. I mean, Mumbai doesn't wish to build itself world-class infrastructure. So what do you do? I mean, if there is no lack of resources, whether it is a BMC or government, people are willing to pay here. But somebody has to plan and put it up. We cannot do it for the city.
Right. So what you're saying is that this leads to a slowing down or a lack of aggregate demand?
Obviously.
In the economy.
Yeah.
Okay,
So that is one of the reasons that aggregate demand. See, there are four components: consumer. So consumer is doing very well. So there is no complaint from the consumer side. You give whatever money, they'll blow. Second is the government. So government is also very. I mean, this time is after a long time I believe it's a solvent government. So they have money, but they are going tightrope walking, fiscal and all absolutely under control. So they are also doing their bit of it, and their revenues are not growing because there is no growth. So tax buoyancy is not there. So per se government is slow, not because of anything, but their revenue itself is not growing at 20% or something. So they are able to control themselves at same 13-14%. Now the investment demand is slow. Investment demand is slow because in the private sector will invest at any point of time, but they have 70% only capacity utilization. So they have excess capacity. So wherever there is a say like Maruti needs capacity, so they are putting up world's one of the largest car plant. So there is wherever need is there, private sector is putting up. Okay, so that investment will come. It will be very opportunistic, but the real big investment will be infrastructure. Now infrastructure has to be done by government.
Right. Okay. So let's take a break on that, Raamdeo, and we'll talk about infrastructure and we'll talk about how that could tie into policy prescriptions as well. Stay with us. You're with To The Point. Welcome back. You're with To The Point. I'm with Raamdeo Agrawal, Joint Managing Director of Motilal Oswal, and we're talking about the markets. Raamdeo, see, before we went in, we were trying to basically define the landscape. You know, what's happening in the markets, what's pushing things up, how are things looking on the demand side, what are the 2 or 3 things which will drive markets forward. So let's look at now, maybe try and bring it closer to policy. So what are the 2 or 3 things? I mean, you know, GST or goods and service tax was one of the big things that markets were expecting. Now that didn't happen. To what extent are markets still betting on GST and factors like that to prop things up?
Markets are very practical that way. At least if you count me as a participant, we don't count anything whatever happens in Delhi till it has happened.
Okay.
So I mean all this hoopla about GST, this, that, till it has not happened, it has not happened.
Okay.
We will not count into the projections. We are not even, I am not even trying to understand how it works for any company. Because you don't know what is going to be included, what is going to be excluded, when it will come, what will be the base rate, whether it will be low rate, high rate, exempted rate. So let's leave it till it happens. Economy is working fine. It's not that without GST, world is coming to an end.
Right. And we were growing at 10% once upon a time with
this economy
GST,
can work very fine without GST. It's working. Should we have GST? Yes, we should have. It is understood to be a superior way. Cascading effects are not there. It can add to the this thing, but it has become more political than economic. So let the politicians decide when they want to bring it, and so I don't have any say on that. Whenever it happens, it happens. So after so many mishaps in Delhi about the policy, what you call overtures or promises, that at least market has learned not to count till it has happened.
Okay, fair
at least I don't count.
So let's park GST aside.
Yeah, park GST. What else?
What are the other things that the markets are looking at then? So I mean, in terms of like sheer doses of investment or triggers in the economy.
Yeah. So if you ask me, I'm looking forward to the leaders, see, this government is a new government, completely fresh thinking is there. Okay, so leaders' job is what? To bring to reality something which is impossible, something which is imaginary, the promises which is made by the leader. Doing possible what is impossible. That's leadership, isn't it? And that's what is expected of current government. So, so far they have done a lot of good things, which has, because of various other global economy and all. So, it has not.
Tell me one thing that you felt was good, at least from a market
Yeah, so
standpoint.
like power sector, they have really made it easy in the sense that there is for the first time, I have a client whose 16 plants are there all over the country, plastic processing. He said, never in life, for last 25 years, all plants got a grid power.
Okay.
Today, all plants are running on grid power, zero
so no backup power required.
No backup power required, which is a big thing to happen. So, so that's, say, like even the response to the steel problem. See what is happening in global economy. China is dumping steel. The guys have gone crazy in terms of below cost or raw material cost now. So government has to respond. Otherwise, the industry will be finished. So what I'm saying is whether the measures are right or wrong, that is different. But at least government is responding quickly. So, so when the government industry works, so the confidence of the industry on the government, presence of the government will increase.
In this case, it only helps the steel industry.
That's okay. Yeah, okay. I'm not for against. Okay. I'm not even saying it is good or bad. I'm just saying there is a response. Only time will tell whether it was right or wrong. Yeah, but see, but government is so powerful in doing anything. Like if Mumbai has to be built, world-class infrastructure is to be. See, this is a globalized economy. So 75-80 trillion dollar global economy. Okay. Do you know what is the savings of the world? 22%. 15-16 trillion dollars is saved. They don't know where to stash it. Negative interest rate. We need just about few hundred billion. Maybe $1 trillion in next 5-10 years. It's very easy to, but we should deserve. You're not going to get it just because you're India or you need it.
Right. You
need to be creating right environment for that, for the investments to flow. So we have to create this place so great that that the entire global savings, they rush to come here, and they actually are being honored, and they are looking for 5-7% return. Dollar return of 5-7% is too much of return. But can we create conducive environment?
So that was really coming to my next question. So we've got all these plans. The Minister for Roads, Nitin Gadkari, said the other day, I was interviewing him,
Gadkari is doing wonderful
and he
job.
said he's looking for $2 trillion in the next couple of years for building roads, ports, airports, and so on. So what's your sense? I mean, first of all, A, do we have the resources? B, if we have the resources, are they in a manner that can be deployed? For instance, the quality of our bank assets are not very good, and therefore they are not in a position to lend that easily, at least. So we've got a lot of baggage to first resolve before we come to current. And finally, and most importantly, are investors willing to put in that kind of money? Though we've seen an uptick in the last year or so, but are investors really willing to put in that kind of money which can take either primary or secondary markets to another level?
Yeah. So see, now FI flow is a very different thing because the world was imbalanced. There were a lot of pools of money with the sovereign wealth fund, and because if you're creating that kind of surplus, it was getting parked in sovereign wealth fund, and they didn't have any business but to redistribute in the world. So money was coming here. Some amount of money, now they are dipping into the savings, and at least they are not generating any more surplus. So clearly FI flow is completely reduced, or at the margin it is negative also.
Yeah, I mean it's more than $1 billion out in just January, since January.
So this could be the spectacle. But you see the FDI. On the other hand, FDI is up by 30-40%. So now you will get government to government money. A lot of governments which are pension funds and all, they are surplus. That money will come. So we have to be ready, project ready actually. Where is the financeable, bankable projects? We should line up trillions of dollars of project that people should pick and choose. It's like Mumbai realty market. Today, if you have 50 crores, you can go and pick any flats here. 2 years back, that was not the situation. So like that, if they want to say, I went to 1 or 2 sovereign wealth funds for presentation. They said, sir, we want to invest billions in India, all close by. But how do we do it? Because they are government. They would like to government to government. So they want projects.
So when you say billions, is it equities or is it?
No. Okay. I mean in projects.
Yeah, projects.
I mean for them it is equity. It's a sovereign wealth fund. So they can, whatever you might call it, there must be some tenor of agreement, part debt, part equity, whatever, or pure equity, or some return, some grant. I don't know how it works, government to government. But they would like to invest here. Okay, but how do you invest? Where are the investable projects? Where if I am a sovereign wealth fund, I say I want to put up $5 billion here.
And there is someone saying that, you're saying?
Yes.
Yeah, okay.
And they're serious about it. So what I'm saying is that the world is awash with liquidity and savings, waiting for a right opportunity. Can we provide that right opportunity? If the world can see that in India you can come and buy stocks, which is very risky actually, and they have put billions. I mean, we were getting about $25-30 billion per year for last so many years. So obviously the world believes in India, and wherever it is fair and clean, once you demat it, once you made it depository and all dematted, I think the money is flowing in and out, and they have confidence. The day on which they want to sell $2 billion, they can sell, and people have got money. When they sold HDFC Bank one day, they got almost $1 billion, and there was no crisis in the market. There was no trouble in the market. So the issue is that once the confidence is developed, same way we have to develop confidence in Indian infrastructure, and government has a great role to play here in terms of clarity of taxation, which is one of the biggest chaos in the world. Second, really providing them so-called relationship managers. If somebody wants to invest, why can't we have a government relationship managers who will take care of it? Sir, come here, have a glass of water, cold water, and I will do everything for you.
So we're doing some of that under Make in India.
Yeah, so of course they are doing it, and that's the expectation. That's what this government is doing very well, and I'm quite sure. I mean, it's just a matter of time. We'll see this new leadership asserting and seeing. I mean, their effort is on, and what happens? It's a Lollapalooza effect. You know, any growth is Lollapalooza effect. A lot of things must come together. Right now, out of 20 things, maybe 10, 12, 30 things are together, but global economy is given way. See, EXIM is very important. What happens is when you export, it's a completely extra demand. 25% growth means 25% again you are producing more. Now they are 25% down. Who the hell is going to absorb that particular entire production? So clearly it is giving that recessionary effect here. You know, if you are producing jewelry, so that extra demand is not being, extra production is not being offloaded into global markets.
Right. Okay, so let me sort of try and sum this up. I mean, if you were to now look ahead, we've got all of 2016, we've got the budget before that. What the 2 or 3 things that you would be keenly watching? You've talked about the external factors. Internally, what would you be looking at?
See, internally we are looking, see, first thing is the result season. So that we have seen, I think it is slightly better than.
Yeah, December quarter seems to be.
Yeah, but still all the jokers, all the big ones, all the very big bad ones are yet to come.
Okay.
In next 10 days, 5 days, till 15th it will come. So we'll see the aggregate. But so far I think it is somewhat better than expected, and purely because of the margin expansion and those kind of things. Clearly the benefits of the oil and commodity decline, that is played out. So I would be looking for actual growth impetus coming from anywhere. And one is the policy prescription, whatever happens, but I am not that excited about what our policy does. They will do. I mean, I am quite sure this budget will try to increase the investment rate, rationalize the taxation, and so those things will happen.
Any concerns there?
No, as I said, I don't have any expectation from Delhi. Let it happen, then we'll see. Because we have to play by the rules of the game set by them. And because I don't believe in inside information, so let it come. Let it come, we'll see. And I'm quite sure that directionally what we hear is they want all the policy to be right. The frameworks have to be right. And let everybody play. So I think one of the best thing I like is ease of doing business. It is conceptually, if you keep just pushing that down, because ultimately the jobs will be created by the businessmen, industries, and your government has to be actually extending helping hand. And if you see every single state today, Orissa also, Chhattisgarh, they are all doing investment seminars to attract investment. So I think the life of businessmen is definitely going to become easier. There is still a lot to be done. But once the government officers and government start seeing that business and industries are actually there to help the country create jobs, you know, and prosperity, because the tax is going to come from them, and if the tax is not coming, what are you going to spend? So the understanding that they are a crucial piece, the business and ease of doing business is to be why 50? We have to be in top 10. I mean, we should be relentless in pushing this and allow the entrepreneurs. Indian entrepreneurs are the best in the world. They're the most hardworking, most bhukka, and are really ambitious. So I think if the ease of doing business is taken to logical conclusion, to that Amitabh Kant or somebody is driving it,
Right.
He's driving it to the level of, say, they're saying 50. I think that will be the most wonderful thing to happen.
Right. So if I were to get a quick sort of 1 or 2 line sum up from you, you're really saying that there are a couple of global factors over which we have no control, which may be benefiting us today, but also are harming us in some ways.
Sure.
The second factor is, which is positive, is that there's a lot of global capital which is sloshing around, and it's only for us to
be competent to receive it.
Competent to receive it, for which we need to show bankable projects.
Yeah.
You're not really worried about either a slowdown in domestic demand or a slowdown in domestic investment, at least to the extent that things could go seriously wrong.
Yeah. So see, never it is in a straight line. I mean, sometimes it is very good. Sometimes, see, whenever you're at the bottom, we are seeing in the markets. When you're at the bottom, you can't see the top. Correct. When you're at the top, you can't see the bottom. So right now we are at the bottom. Okay. So we can't see the top. It will come. The best days are ahead.
Okay.
I don't have any doubts about the markets, about the economy, even about the world economy. The best is ahead.
Okay. That's a good note to end on. Thank you so much, Raamdeo, for joining us.
Thanks.
Well, that's all we have time for on To The Point. We'll be back soon. Thanks for watching.